Okay, so let's finish up with customer lifetime value. And often this one is referred to as CLV. So think about your clients. Perhaps you're an accountant and you've got a client. Let's call him Mike. And Mike isn't just valuable to you as a business for the end of your tax return, because if Mike sticks with you for all of his accounting needs over the years, the total revenue he brings your business over that period, that's his CLV, or his customer lifetime value. I'm going to share a real world story with you. I'm going to show you an example where you can see how to work this out, because this is an incredible metric to know. So here's what it's based on. I created a free masterclass last year, and in the masterclass, I delivered a keynote speech about clarifying your marketing message. It must have been really good, because at the end of the masterclass, I offered people the opportunity to take me up on a 90-minute marketing consultation. And I gave them like a really incredible price for this marketing consultation that has never yet been duplicated. But maybe watch this space, folks. If you've signed up for the Master Your Business newsletter, I may well offer this similar training, because last year I did the consultation. I offered a full report, a 50-page report on what the next steps were to help market their business successfully. But when I ran this last year, 6 people purchased this €99 offer from me. Okay, for those of you listening as opposed to watching, I'm getting the whiteboard out here on Zoom so I can share some sums with you. Okay, and in this exercise that I'm about to show you, in reality, you can do this for all your customers after the year has gone by, or you can work it out by customer, or you could work it out by campaign, and you can do it on Excel or in some other way, right? Okay, so I'm going to show you how to work it out basing this on the 6 people who bought from me. So there is a formula. First thing I'm going to do actually to make this easy is to group the customers and their transactions. Okay, so one customer, for example, one customer paid me a total of $12,599 over 12 months. So group 1, this customer paid $12,599 over 12 months, and they made 3 purchases. We'll do group 2 next. So in group 2, another customer paid me a total of $51,199 over 13 months and made 4 purchases. And then the final group was group 3. They each paid €99 just one time, and there were 4 people. So we've got groups now. Okay, now next thing we need to do is calculate the CLV for each individual group first. So here's how we do this. What we're going to do is, for group number 1, we're going to work out what is the average purchase value. And we do that by taking the $12,599 and dividing that by 3, because that's how many purchases they were. And that works out at 4,099.67. Okay, so that's the average purchase value. So this figure here, 4,199.67. Okay. Now what we want to do is we want to figure out what is the purchase frequency. So the total number of purchases divided by the lifespan in months. So this person made 3 purchases over a 12-month period. And my brain is able to work this one out. So that's a quarter, right? And then the final one is the customer lifetime value is equal to the average purchase value divided by the average purchase frequency. So this is the frequency. So we need to just multiply one by the other. So here's what we do. 4,199.67 by 0.25 is equal to 12,599. Okay, so now what we need to do is take that over here and do it for group 2 as well. So let's see, the average purchase value here in this one is 51,199 divided by 4. So that gives 12,700 799.75. And for the frequency is 4 purchases divided by 13 months. And that works out at 0.31. Okay. And now we need to take out what is the CLV, which is the average purchase value divided by the frequency. What's this work out at? That works out at 51,199. Okay, and then the final one is going to work out pretty similar. Let's see. So here, what we're going to work out is 3 people made 1 purchase. So that's pretty easy to work out. And they did it once, but there's 4 customers in the category. So what we need to do is actually do 99 times 4, which is equal to 396. Okay, so now we have that much done. Next, what we need to do is work out what is the average of all of those 3 things together. So we need to take the total CLVs and divide them by the total number of purchases. So here's what I mean by this. So we take the 12,599 and we add the 51,119 and we add the 396. And then that is a formula in itself. And then we're going to have to divide that by 6. When we divide that by 6, that's going to give us the average customer lifetime value for this whole example, right? So let me work this out. So 10,732. So the average customer lifetime value, the average CLV across all customers in this example is 10,732. This means that on average, each customer over the lifetime that they engage with me and my business, based on this campaign alone, is 10,732. Now, let me just add here that this is a simplified calculation in terms of how you would actually work this out, because it doesn't allow for the cost of servicing the customers or the discounted rate that I applied, or it doesn't allow for any acquisition costs in terms of the marketing spend that went into the campaign. And it assumes that each customer's lifespan is basically the same as the period they've already been a customer, which mightn't be the case in every instance that you calculate this in. So the starting point to figure out all of this is to figure out the average purchase value. And how you do that, as I say, is you take the total purchase amount and then you divide it by the number of purchases. When you do that, then you need to figure out the purchase frequency. So that's the average number of purchases a customer makes in a given time period. And finally, then you just multiply one by the other. So there you go. That is the power of calculating your CLV. Well, my amigo, there you have it. Pleasure having you here again, as always. The 3 golden metrics to measure your customer's experience we've covered in great detail today. Master these and you're going to be well on your way to business mastery.